Mr. K Venkatraman, Managing Director with Titan. Let's connect with him to understand that which way things are moving and how the demand is stacking up going forward. Good morning. Thank you for joining us. I'm going to first start with the broad overview on the numbers. For the quarter gone by, margins did come under pressure, and this has come under pressure for a quarter which was supposed to be the peak festival quarter. What has transpired to this drop?
Actually, the morning to start with, actually the offtake growth of the company was pretty good and consistent through the quarter and for the quarter as well. It's just that because of the business model we have and the one of the channels, which is a buy and sell channel, the sales to that channel changes to some extent depending on when the festival season starts in quarter three. And therefore, there is a shift that happens between quarter two and quarter three. That's one background thing. And the other is that finally, we look at business from a slightly longer term point of view and not just every quarter. So if you look at the performance of the company for the first 9 months of FY23, we have every reason to be feeling very satisfied. So therefore, partly because of the low company growth than the retail growth, and partly because of multiple investments that we continue to make at the time that we think we should be making. These are the two reasons for the quarter three margin to be, what you described, but we are not, concerned with it at all.
Normal trajectory then. Will it go back to the levels of Q2 eventually?
It's a continuing thing like that, yes. That is our 12 to 13% that we keep speaking about with growth as the mantra for us all the time. Yes.
Basic question, this for the benefit of our viewers. Titan will make more money, more top line, and more profits if the underlying price goes higher. Gold prices have gone higher. Diamond prices have gone higher, which means your making charges would be higher. When will that start getting translate into your profits and your top line?
Actually, the gold prices are totally hedged by Titan. And so when they go higher, it doesn't mean that we make, we buy at X and sell at 1.1X or something like that and make that 10%. Only to the extent that the making charges are determined on the gold rate, there is a small kick in, that happens, and which, keeps coming in as and when that happens. As far as diamonds are concerned, this year we have had some additional gains because of the diamond prices have gone up. We have outlined it briefly in the calls over the quarters without getting specific about it, which we still don't intend to. But gold is a pass-through by and large, and therefore when prices go up, the company doesn't necessarily make much money.
But Venkat, do you worry that with gold at all-time high prices, that may hamper demand?
See, the thing is that over the last, let's say, 2 decades nearly 2 decades that I've seen, at every point, when it is high, and let's say it's the highest in history, this question, has come up and has made us think about it. But because gold is also a monetary asset, it's a store of value, people know that money that they put in is sitting in it. Typically, they end up adjusting the weight of the product that they're planning to buy within the broad, rupee budget that they have in mind, with some kind of flexibility. 100,000 budget may go up to 105 or 110 or something like that. But the grams that they may buy a slightly smaller piece compared to what they originally thought. But otherwise, unless there is a yo-yoing in price, people are not that particularly, stressed about it, because it also indicates the overall strength of that monetary asset and in a way a hedge for people against uncertainties around them.
So tell me, if January has been good so far, and if you could quantify the growth for us, did you see over 15 to 20 odd percent kind of numbers in the month of January?
I wouldn't like to, share that.
Sure.
We spoke many times yesterday on how we were quite satisfied with the growth rate in January, the continuing positive performance in January, and I would like to stay with that high level of optimism without sharing anything specific.
You mentioned in your conference call that competitive intensity has increased. I wanted to understand what's the nature of this. Is it by local players? Is it by the large organized players such as yours? And what worries you about this? Is it going to eat into your market share?
What has happened over the last 3-4 years is that many local players across maybe 30-40 cities and towns have realized the opportunity in differentiated jewelry, in better customer experience, and have certainly souped up their overall customer value proposition through better stores, better products, better customer experience and all that, and in a way reinvented themselves. And that's what we call the increase in the competitive intensity, apart from the national players wanting to scale, wanting to expand, becoming more aggressive in marketing and pricing and all that. So therefore, at one level, there is an increase in the overall competitive intensity. But at the same time, all these players, including us, represent a minority of the total industry. And the majority, which is the informal, medium, and small jeweler across the country, has been under pressure from multiple factors, from the demon time in 2016. And therefore, even as these people are getting more, let's say, better at their job, the overall opportunity for people like us is actually expanding. And we're not really worried about them. We're, of course, very, very conscious about them. A lot of what we do, takes into account the competitive aspect in every city. And we're not at all, we remain very alert about them, but we're not worried about them because there is a certain customer profile, a certain customer value proposition that Tanishq stands for, which is very, very unique. And that's not going to be easy for anybody to touch into.
I've had the pleasure of tracking Titan for almost 2 decades now, and I've always said that it's a great capital allocator. They generate a lot of cash flow and then they incubate a lot of new businesses. But if I look at the last 2 or 3 businesses which you've incubated from internal cash flow, some of them have not managed to reach scale. Would you agree with that?
Yes, they have not reached scale. And one of the things that was impeding them is even the structure within the company. And 3 years back, when I was moving into my role and Bhaskar was leaving, we decided that for them to really blossom, they need to be given wings, they need to be given freedom. And we created new structures. So we created 3 new chief executives reporting directly to the managing director. And if you see today, the ambition that we have declared for Taneira, which is about 5 years old now, the ambition that we have declared for the international business, which is 3 years old now, and the actual performance of the international business, we are really expanding at a very, very brisk pace. Like, for instance, I myself was the CEO of the jewelry business for nearly 15 years. I was responsible for the international ambition as well, but very little happened even under my watch. But after I moved out of jewelry and we moved international out to directly report to the managing director, in the last 3 years, we have gone places in international. And in the last call, Dini spoke of, close to 20 stores of Tanishq outside India by end of FY24. That's a very, very ambitious and exciting picture. Similarly, Taneira is really expanding in a very big way. We're setting up stores every month all over the country. We want to make Taneira the Tanishq of the sari industry, reinvent, reimagine saris once again for the Indian woman. So partly it was structure and therefore focus, resources and all that. And we are very convinced that all the sort of late start, so to speak, which you are very right about, we will end up making up for it And same thing with smart wearables. We have a whole new organization, a new chief operating officer from the right technology background who's now running it. And the last 9 months, it's gone through the roof. So in the next 2 to 3 years, you'll see a very different picture on this subject.
So Venkat, can I summarize our today's interaction by saying that one should not look into the number for the quarter gone by, and as a management of Titan, you don't see any slowdown, any kind of peaking of demand, and the Titan customer is not rusty at all.
Yes, to all three. Yeah.
For a good quarter, great quarter, or a bumper quarter, Q4.
Let's wait and watch.
All right, appreciate your time. Thank you for joining us. Let's take a break.